need to be an expert in order to achieve satisfactory investment returns. All you need to do is to recognize your limitations and follow a course certain to work well. These are the valuable words lifted from the world's most admired investor Warren Buffett's recent letter to his shareholders, where he talks about his 2 real estate investments. Today in the Realty Debate, my attempt will be to cull out that simple course of action which can ensure that you don't go wrong with your property investments and make reasonable returns. My panel today: Ritesh Vora, Partner Real Estate, IDFC Alternatives. Also Harsh Rungta, CEO apnapaisa.com. Amrish Baliga, Managing Partner, Global Wealth Management, Edelweiss Financial Services. Vineet Singh, Business Head, 99acres.com. Ramesh Menon, Director, Certis Realty. And Sameer Jasuja, Founder and CEO of Prop Equity. Gentlemen, thank you very much for joining me. Let me begin with that first notion that I think a majority of people in this country with 1.2 billion population have, that property prices can't go down, especially if you're willing to hold the asset for 3 years plus. My big question is it a myth or reality? I can see Harsh smiling there. So Harsh, over to you with that first question.
Well, I think I would say that's a myth, because we have seen property prices go down. I mean, even in India, I mean, anybody who's been at it for some time knows. I mean, we've had this period during the mid 90s. We have had this period during the mid first decade, 2004, 2003, 2004 period. In fact, there has been, at least as far as Bombay is concerned, and we've done these numbers on the ready reckoner rates that are published in Bombay for the last 20 years, and we have a 10-year period over which there is a negative return, slightly negative, but there is. So I think this notion that property prices have only one way to go, and that's up, I think is something that people need to think about. Because we have seen it drop in the past, and it's hugely regulation driven. I mean, the supply of any commodity that's completely rationed, and where the rationing rules can change overnight, I would take anything on that with the normal caution that I would have on any asset class. So I think that is the only point. I'm not saying it's a bad asset class. I'm just saying the normal caution that I would associate with any asset class, I would associate it with real estate as well.
Okay. So you're saying it's a myth, because there has been a prolonged period, almost a decade, where India's real estate actually saw a deep depression and came out of it just maybe slightly negative. Amrish Palika, maybe that period has been forgotten. You know, if you look at 2004-5 onwards, literally till the last maybe 9 months, previous 9 months, you saw a kind of a secular run, with perhaps just a short period when prices just, you know, real estate transactions got locked out, and that was post the subprime crisis in the US. So is it that we've forgotten? Is that the reality?
That's what normally happens in any sort of a bull run, whether it's a stock market or the real estate market or even in gold. When you have the prices moving up for a long period of time, people tend to forget that the prices can come down. So I would clearly say it's a myth. At least if you're talking of a period between 1 to 10 years, I suppose it's a myth, because we have seen that in the past. In Bombay itself, in 95, Nariman point was about 25,000. And by about 2002, 2003, you could get properties at about 8.5, 9,000. So that's sort of a crack we have seen. Recently, we have seen that in Hyderabad, where people had bought at much higher levels in 2008, and those prices are still not seen. So, if you're talking of a period up to 10 years, yes, I suppose you should see a correction. But in India, again, if you're talking of a much longer period, if you're talking of 15, 20 years plus, prices have gone up, and that will continue moving up as long as the population keeps rising and the demand is there.
Okay, Sameer. You know, 50% of India's household savings, and that's what your RBI data says, goes into real estate. So one is that buying property for a middle class Indian in tier 1 cities or even tier 2 cities is no longer a cheap thing. It's an expensive proposition. So I think the bulk is because of that. But do you believe that especially in the last 9 to 12 months, when we've started seeing a correction, that correction is over? Or is this the beginning?
You see, I think it's very difficult to answer that question now, because now the real estate markets are more becoming like the stock markets, where you have to
Which is a very scary thing.
Which is a scary thing, where you need to understand a lot more data points, parameters, dynamics before you make the right decision. Today, demand supply plays the biggest role, which was not the case about 5 years ago. There was hardly any supply. It was literally a seller's market. Now, with so much supply coming in, and the supply, and it also depends on what price points we're talking about. So at luxury price points, it is there's an oversupply, or a mid-market. In certain cities, there is an oversupply. But if you, for example, look at Bombay, ready built up, the prices are phenomenal, but there's no new supply coming up. So you cannot expect prices to come down, because the demand far outstrips supply in those kind of cities, right? And you have to work and live in those cities. So from an end-use perspective, you will continue to buy even if the prices are very high.
So hold your thought. That's what I think the interesting part is, that it's no longer a blind investment beneath, isn't it? There was a time when you just looked at a reasonable property, or someone even just called you up and said, hey, that's a great property to buy. I'm buying. Why don't you just buy it? And you would probably, not go wrong with that. Yeah. Right? 2005, 2006, everybody is sitting on very hefty profits if they did invest in real estate. Now, the market has become much, much smarter and data driven.
Yeah, you are absolutely right. The myth is broken that real estate is a solid investment where the only thing that you get is
there's no downside.
returns.
That's what
there's
I've
no
heard
downside.
from people.
So,
maybe it won't do well, but there's no downside. It's not going to go down.
Yeah. So real estate is a very good investment product, a good investment asset class, but it is the riskiest because the quantum of money involved is the highest.
Yes.
Just before coming here, I was going through the top 15 cities data in terms of top 3 performing localities in terms of price increase, and the bottom 3 performing localities in terms of price decrease. And each and every city, okay, you see top 3 localities in a range of 5 to 20% price increase, and the bottom 3 all negative.
Really?
Okay, so in the same market, you have localities which are giving you 10-20% capital value return on an annual basis, and there are localities which are giving you minus 20%, minus 10%, minus 5% as well. So real estate investment education for the general consumer has become a very, very important thing. It is very important that a retail investor educates himself or herself on how to go about investing in real estate, do due diligence and research before choosing where they want to invest. Because like the stock markets, it is very important that which stock do you invest in? Are you catching a rally? Are you catching the right stock? Are you catching some sort of growth story in that particular industry or company, and so on? The same is a story that is repeating itself in real estate.
So it's just become very, very data driven and factor driven. It's not like real estate will do well anywhere. Has the euphoria settled down, Ramesh? I mean, you're in touch with investors very regularly, and do you think that there's a little bit of sanity which has come back into the market, where investors are not that eager to pump in money into real estate?
I won't say there was a euphoria earlier too, but the fact remains that...
there was an euphoria. Believe me, every from the time I started doing the property show, I would walk into a get-together on a Saturday evening and people would ask me, where should I put my money in real estate?
That was because there was the people with, especially the salaried class, where they had the ability to leverage capital from the banking system, etc. Probably 2 places where they went wrong was they could not input the cost of capital and the inflation into their purchases.
Right.
That is where all this negative thing is coming. But to mention the HNI and the ultra HNI audience, which primarily invest into slightly larger ticket of real estate, they are circumspect, primarily owing to the fact that there is a lot of political uncertainty, and no government in the past few years has actually accelerated the process of permissions and regulations.
Hugely regulated industry.
Yeah. So hence there is this inkling doubt whether their money would see the fruition of the returns that they seek. So yes, there is circumspection around that investment now.
There is. Okay.
Yeah.
All right. Ritesh, come in here. You've just closed a real estate fund. I mean, we'll come to the various methods you have to invest in real estate, but you would have studied and researched a lot before creating a real estate fund, which will invest primarily in residential assets of this country. Tell me, what's your prognosis for the next 3 to 5 years?
Sure. So, when we looked at the markets, Our sense clearly was that over the next 2 to 3 years, or let's say 4-year period, we were not very positive or bullish taking an equity exposure in real estate projects in India. Which is why when we crafted this particular fund, we looked at a debt type strategy where we've actually raised a fund which is specifically a residential lending fund. And what we're really trying to do in this fund is to actually go into projects which have already been launched, which have been substantially de-risked in terms of approvals and construction mobilization and sales, and actually lend to those real estate developers to essentially generate a certain fixed kind of a IRR for our investors over the next 3 to 4 year time horizon. Our sense clearly is that there is an oversupply in many markets. There is all sorts of data points that today can impact real estate prices and real estate sentiments, and especially given the current environment where we are just heading into an elections, where there is some amount of uncertainty in terms of what the future would hold over the next couple of years. We felt this was a better strategy to go with.
All right, hold your thought. You did actually, isn't your fund aiming a 22% IRR?
Yeah, we're looking at IRRs in the early 20s. That's right.
Okay, early 20s. Now, that's what's exciting. If you look at returns, if you were to invest directly into a real estate product, which is a residential home or a plot, what are the returns that you're likely to get? I mean, after all, should you be not looking at the kind of appreciation you would be getting, or should you go, if you can afford to, a slightly higher ticket of investment, also enter through funds which are investing in India's real estate market? We'll come back and look at that question. It's a really interesting discussion. How do you make the most of your real estate investments? And it's not all about going after that pre-launch project which brokers chase you with.